Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, where you can find the link to the website in the description below. Interest rates are expected to head lower. The question is, how fast will this happen? It looks like there could be one or two cuts in 2025, depending on inflation and the economy. A lower interest rate environment supports capital-heavy businesses such as those found in real estate investment trust vehicles, or REITs for short. The REIT is designed for income investors, given that it's required to distribute at least 90% of its taxable income to shareholders in any given year. And the math is very simple. The more the REIT makes, the more income an investor receives, and vice versa. So we think the move to a lower interest rate could power an upside move in REITs. Take the case of Ready Capital Corp. They're traded on New York Stock Exchange under symbol RC. It's a small cap REIT with a market valuation of $1.1 billion as of this recording. John, what can you tell us about this REIT?
Yeah, thanks, Mo. RC Capital operates as a multi-strategy real estate finance company. Ready Capital originates, acquires, finances, and services lower to middle market investor and owner-occupied commercial real estate loans. To hedge against the loan risk, the REIT focuses on loans collateralized by commercial real estate. This includes agency, multifamily, investor, construction, and bridge loans, along with the U.S. Small Business Administration loans. In our view, the expected crashing down of interest rates should help power demand for the company over the next few years.
On the financial front, it's tracking towards $1 billion in revenue.
Yeah, Ready Capital's business is generally dependent on the economy and interest rate environment. Strong economy and lower rates are both positive factors, driving clients to expand, which benefits Ready Capital. In 2023, the REIT reported $945.8 million in interest income, which is the revenue derived from its loan investments. But as noted earlier, the interest income is highly correlated to numerous factors, so it can be inconsistent. Case in point, analysts estimate that Ready Capital report a consensus 921.6 million in 2024, albeit the range varies from a low of $905.3 million to a high of $940.8 million. Now, the REIT's wide moat for revenue extends into 2025 with an expected drop to $785.7 million. The estimates are extremely broad, again, ranging from a low of $300.3 million to a high of more than $1 billion. A look at the third quarter shows that Ready Capital had interest income of $226.5 million compared to $248.7 million for the comparable period in 2023. Now, the first three quarters delivered interest income of $693 million, suggesting that the consensus estimate is at least on target.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could also sign up for a free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, how is Ready Capital doing on the bottom line?
With regards to profitability, Ready Capital reports on both a generally accepted accounting principles or GAAP and distributable earnings per share. That's the company's core or adjusted basis. Now, distributable earnings is what the company looks at when it comes to dividends. In 2023, Ready Capital generated $2.27 per share in GAAP earnings and $1.18 per share in distributable earnings. Analysts estimate that the REIT will hit a consensus distributable earnings of 97 cents per share in 2024, rising to $1.16 per share in 2025. But just like the interest income, the estimates are quite broad. The range is anywhere from 80 cents to $1.14 for 2024 and 97 cents to $1.39 for 2025. Third quarter, Ready Capital reported a GAAP loss of 7 cents per diluted share and a distributable earnings loss of 28 cents per diluted share. While this was well short of consensus, the REIT still paid a 25 cents per share dividend.
Taken together, its high yield dividend is safe.
Ready Capital stock current dividend of 25 cents per share was paid in September, December. It's down from 30 cents per share in June and March based on the REIT's recent dividend. The annualized dividend of $1 translates into a forward dividend yield of 14.2%. Now, the expected payout ratio is 103.1% for 2024, prior to falling to a reasonable 86.2% based on 2025 estimate. Now, moving forward, we expect Ready Capital to continue to focus on delivering income to investors. If the economy holds and interest rates decline, the company could see a corresponding rise in distributable earnings and dividends.
John, thank you so much for your insights. Ready Capital operates in a complex loan business that entails risk and macroeconomic uncertainties. The company has navigated through uncertainties of the last few years while still paying dividends. The REIT is also in the midst of $100 million stock repurchase program started in 2023. So far, Ready Capital has bought back around 1.7 million shares at much higher average price of $10.82. This suggests that the company believes its stock is undervalued. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.